Welcome to the Unlocking Wealth podcast. Thanks for joining us. We will motivate and inspire you as we share strategies from successful and wealthy individuals. Here is your host, David Ordonez, an entrepreneur and real estate investor.
Welcome to David Ordonez Unlocking Wealth podcast, and I'm very excited today. We have as our guest Lincoln Archibald. He's an active investor. He's a general partner and limited partner in different funds. He's a fund consultant at IFS, which is an investment and fund secrets mentorship program. And he's dedicated to helping people start, build, and scale funds. So I'm excited to have you, Lincoln. Thanks for joining our show today.
Hey, David. Happy to, man. Good to see you.
That's awesome, man. That's great. Well, I did a quick intro on you. Why don't you start telling us a little bit about yourself, how you've became involved with funds, what are funds, how you can scale businesses through funds, and just kind of let's dive in, man.
Yeah, no, I've been fortunate to have a pretty wide range of experience, working in banking and venture capital, and I think I was first introduced to kind of this high finance alternative assets when I was at JP Morgan, working with these bankers, and yeah, it's a fascinating industry. It really is. It's growing like crazy, but yeah. So now. You want me to explain what funds are?
Tell us a little bit about yourself first. I mean, where did you grow up? Where you from? Where did you go to college? I know you did 1 year of service abroad. I mean, just tell us a little bit about yourself first.
Yeah, no. So I'm from Idaho, small town, Shelley, Idaho. I'm a stereotypical Idahoan. So I actually grew up working on a potato farm. I did that for like 10 years, started when I was like 10 years old, all the way up until I graduated high school. I was working in potatoes. So, and then I went abroad for a couple of years, service-based mission in Sweden. So I speak Swedish, was over there for a couple of years, came back and went to school at Utah State University. Moved around a couple of times, but I actually ended up back here in Logan. So it's northern Utah. But that's me. But been in finance for several years and loving the changes, love everything that's going on. It's been fun.
How did you get presented to the fund world, and when did you get involved with IFS, which is the mentorship program that you work now with Bridger?
Yeah.
Tell us how you got connected there.
Well, I got into real estate development. I was syndicating large scale, real estate development, small, mixed use. We're talking our target was 70 units, with a commercial play on it. But yeah, Bridger. Me and Bridger have been friends for years, and he said, "Hey, I'm starting this, investment fund secrets, where we teach people how to start investment funds." And I was like, "Well, that's ridiculous. There's not a big enough market for that. There's not enough people that want to do that." And he's like, "No, I think there is." So him and Mason, Bridger and Mason started it, and I hopped on a couple months after. I honestly didn't think too much of it, didn't think it was going anywhere, but there's a lot of demand when you get into all the alternatives, so inclusive of real estate syndications and venture capital and private equity, and then all the traders out there, not only with options and futures, but now the whole crypto segment. People are starting to want to manage other people's money, and I didn't realize how big the market was. So it's been great. So that's
what year did IFS start?
2020.
Oh wow! So that's literally just a little bit over a year.
Yeah. Well, I think so. Bridger and Mason started at late 2019, just kind of concept, but no, the official launch was January 2020.
That's great. Well, I'm part of Black Card, which is a mentorship program at IFS, and I've been learning how to launch a fund, how to structure a fund, and how to scale, obviously. So there's this myth that funds are exclusively for Wall Street and Ivy League, right? People that graduated from Ivy League schools. How different is for a regular guy like you and me that didn't go to a school, Ivy League school, that doesn't work in any of the big firms in Wall Street, to launch a fund? I mean, how complicated is it? What do you think?
Yeah, no, it's a great question. I mean, funds are evolving. They used to just be, um, you know, segregated for those that have, like you said, Ivy League degrees, worked on Wall Street for 20 plus years, and they have this great network. They start a fund. So a lot of people, when they think of alternative assets, they think hundreds of millions of dollars and working with institutions. And yes, that's like Blackstone and KKR and Sequoia. And yeah, that's definitely, a market, but there's also this kind of sub-market for emerging fund managers. You don't have to start at that level, right? You can raise a fund. So Bridger, my partner, his first fund was 50 grand. Like he literally just raised, $50,000 and started doing kind of hard money loans on it. So it's not reserved for, just this elite, subset of humanity. Like anybody can really start a fund if you have a deal, right, where you can make people money, and then you have demand for that deal, so investors that are interested, then that's all you need, really. So, and then they are extremely lucrative, and you can make a lot of money. So it's been fun working through IFS. Our clients, just in the 2 years we've been in business, last I checked, it was north of $2.5 billion. It's probably more than $3 billion raised now.
Wow.
Just through our client funds. So yeah, it's fun to be a part of.
Oh, that's great. And the idea of a fund, when it was introduced to me, actually watching one of Bridger's videos, it's basically a pool of money. For the listeners that don't really understand funds, right? The fund is a pool of money that investors put money on, and then the fund managers go and invest in deals, like you said, real estate, venture capital, cryptocurrency, whatever. And then the returns that are generated by that fund, it gets split between the investors, which are the limited partners, and the GPs, which are the general partners, which are the fund managers. Correct, Lincoln? That's the concept, basically.
That was great explanation.
I learned it from you. So, what do you who do you think it was a big mentor in your life through the process, and what are you how you feel about the mentorship or the coaches that you've gotten in your life to this point?
Yeah, it was actually one of lifelong friend, one of the best mentors I ever had. I got my undergrad at college. Was a professor who came from banking. He worked at Citigroup for, he was an MD there for 20, 30 years, made millions of dollars. But, coming from just this, I had limited thinking in my childhood, right? Coming from a potato farm in Idaho, you don't really have too high of aspirations. But, I always loved reading, and I always loved just learning. But he was one that really pushed me to say, like, look, you can do, awesome things in this life. Like, you don't have, like, don't settle for anything less. So we still go to lunch, and we stay in great contact. But he was probably a really critical person for me in my life. Just always encouraged me. Like, I always call him, like, so just last week, I decided to get into drop shipping, so I invested, 25 grand into this guy to set up a drop shipping store for me. And, he's like my investments consultant. Like, I'm like, hey, we always just talk investments with each other now. It's like, yeah, I'm thinking about doing this. What do you think about it? And, we'll kind of pick apart each other's investments now. And it's just fun. Like, people like that you can have lifelong relationships with. it's not just, I don't think mentors are a one-stop, like one critical point, like one thing they said that changed your life. I feel like it's,
And I
constantly.
think you have many mentors throughout your life, right? I mean,
Yeah.
it depends on the season of your life where you're in, and then you have one or two, or people that are always encourage you or serve you as a mentor, as a good friend and mentor, to push you to to move forward. What about your mindset? I mean, you said at the beginning of your when you were younger, you came with you had some limited beliefs. How did you work on that to open up your mind to infinite possibilities of unlocking wealth, of creating wealth for yourself?
Um, that's a great question. I think it all comes back to preparation. Like, the more the more people you talk to, the more opinions you get. Um, then you can make an educated decision on your own. And through that time, when when you make a decision and there's a positive outcome, then you gain confidence, right? And so usually it's that first nudge to make that first decision, um, and until you gain that confidence to make it all the time. So I think it's just critical if you're struggling with that first time to do anything. It's just about getting extremely educated on the subject at stake, and doing all the due diligence you can, and then just gathering opinions. Just as our friend told me that you are never the smartest person in the room at anything. Like, there's always going to be someone smarter than you at something. So anytime you make a decision, go out and solicit a couple of opinions from people you respect that are smarter than you, and then you can make an educated decision on your own. So
Hmm.
I think then once you've made that first decision, then you're golden from there.
And also that leads to the importance of networking and building a good team and surround yourself with great people, especially when you're launching a fund, right?
Yeah.
Because you need a lot of team members in a successful fund. And
Mhm.
what do you think are the key players when you're launching a fund? Um,
Yeah, no, it's a great question. So I mean, we kind of teach the principle of three main roles. There's kind of the fund manager, who is just, you look at them like an administrative operations manager, a company manager, a business owner, whatever. But there's kind of that fund manager personnel. There's a money raiser, who's, because you always need to be raising funds, right? So somebody that's networking, that's constantly going to events, getting into new networks, just constantly bringing in new dollars, and then maintaining those client relationships, right?
Sales skills.
Um,
Yep.
what's that?
Sales, basically.
Yeah, yep, exactly. And then you have your expert investors, somebody that knows the deal inside and out. And each one of these guys or gals should have teams below them, right? As you continue to evolve, and you'll need additional personnel. But like that's all you really need to start. And in some small funds that we even see here, you can sometimes wear, two of those hats,
Mm.
if needed, in the lean stages. I think that's, how Ken Griffith started, with Citadel. It was just him and a buddy, started in an office, and they were doing everything, until they had the cash flow to, hire on new people. So, um, yeah, it's been interesting. I think so I sit as an advisor on, multiple funds, and I think that's probably one of the biggest things I see is that people just don't, they don't put the right team together, right? They're maybe a little more selfish with equity. It's they don't want to forfeit part of the management company. They think, well, since I'm the guy that's making these investments and I know how to achieve, find alpha, I should, get a larger
Mm.
piece of the pie. But in reality, if you don't have money in the business, right? If you don't have capital raised, you're not going to go anywhere. So I think you do just have to put your investors first, and be willing to bring on the right partners.
Huh. How many funds are you part of at the moment, Lincoln?
So that
How
I'm
many
a
funds that you're part of right now as a GP or LP?
4 or 5.
Okay.
The fifth one's kind of in process, so four right now, but a fifth in the
What
process.
space? What space are those funds on?
Kind of a lot, pretty scattered. It's not really good to have the same. You don't want to be a general partner of the same funds and have any conflict of interest there, right? If I was on two multifamily, part of general partnerships, that creates some conflicts
Conflict.
of interest for, depending on my job description. But yeah, so one, I'm in the dental space, DSO roll-ups. The others, it's media, affiliate marketing, multimedia. The others, real estate development, naturally, and then on a hedge fund. So
That's great. And you're a GP on all of them.
yeah, yeah, and then two of them I function as just strategic advisors. So not quite a general partner.
Okay. And you're also doing the mentorship program to students from Blackcard and
Yep.
IFS. Yeah.
Yeah.
How
So
many students do you have at the moment?
yeah, and in Blackcard now we have about 250.
Okay.
So
Great.
yeah, it's
Great.
growing.
And so Blackcard, for the listeners, is part of the mentorship on the funds. That is more of a VIP mentorship, correct, Lincoln? And you have access to a one-on-one mentorship. You have access to certain events and networking events. As a matter of fact, I attended the one in Salt Lake City a few months ago, and I'm looking forward for the one in Vegas actually coming up in April, right?
Yeah, we'll have another one coming up. I mean, that's the whole. Yeah, thanks for putting that out there. I mean, the biggest thing is just that you don't know what you don't know, right? And by connecting with people in the same spot as you are, and as you're launching, I know you're working on some real estate funds yourself. As you're launching those, it's you just want to be able to network with like-minded people, and there's a lot you can learn from their successes and their mistakes. So yeah, it's been a really fun program and business to be a part of. So.
Yeah, I agree. I mean, it's been great learning for us. We're still on the process of launching our fund and still learning more, trying to put the team together, which is one of the key things. But yeah, no, I'm really excited about it. The fact that you can scale with the fund so quick. And acquire assets and scale the business it's mind blowing. I mean, and that's a concept that unfortunately is not really taught anywhere. I mean, if you go to, it's not. I'm kind of excited about IFS because it's kind of like the first mentoring program that makes a fund available to everybody. Like if I want to start, like you said, a $50,000 fund, really you can do that. I mean, it's not exclusively for the big Wall Street firms and so on. And that's what I think is so important about learning how to launch a fund.
Yeah. I mean, one thing I'll just add on top of that is there's just these little barriers that people make for themselves, right? They're like, well, I don't know anything about compliance. So I don't want to get in trouble with the SEC. So, this is just a route I don't want to go down. When in reality, there are services and businesses out there. Well, they will hold your hand and make sure that you are compliant and, are following all of, SEC mandates. And so just know that there's resources there. And, before IFS and, as Bridger and I were starting our funds, we know there's not a lot of material on the internet. It's pretty scattered. And there's obviously service providers that help the big dogs, but they don't really want to help you unless you already have 100 million in the door, because that's how they make their fees. But so, it just took a little while of compiling all the information and all the service providers, focusing on what you need to know. But once you know that stuff, your confidence just, goes through the roof. And then you're like, okay, wow, this really isn't as terrible or crazy or difficult as I thought it was. So
yeah,
I think a lot of it just does come back to that confidence.
Yeah, and it's that fear of the unknown, right? And also it can be intimidating at the beginning when you're talking
Yeah.
about a fund, right? It's like, oh, and I have to be compliant with SEC, and I have to do the filing and hire an attorney, and so it can be intimidating at the beginning. I would agree with that. But once you get the resources and the training, you feel more confident, and then you just go ahead and do it.
Yeah.
What are you doing now? What's the big next step for Lincoln? I mean, what are you what's your biggest goal for this year?
Yeah. No, that's great. So with the real estate group I've been a part of, they're actually more transitioning to being a general contractor, which I don't want to do. So I'm kind of phasing out of that. And through IFS, there's actually some really cool things. So we're actually, it's not officially yet, but we're planning on Q3 and Q4 of this year of starting our filings for a fund of funds for IFS.
Okay.
So we'll go out and we'll raise a bunch of money, and that way we can allocate to all of our clients in the program. So that's kind of what's on my horizon is tying things up so I can systematizing everything, so my focus can be on that of going out and fundraising for this new fund.
Can you explain for the listeners what's a fund of funds?
Yeah, totally. So it's basically a fund, you're traditionally in a regular fund, you're an active manager of that capital, right? So whether you're trading it or you're selecting the deals and you're still managing that deal, whether you're by a company, you're going to be managing the company. It's pretty active in nature. A fund of funds is very passive. So, in a fund of funds, you'll go out, you'll raise the money, and then you'll allocate with other managers. And there's some different benefits. You're probably saying, well, why would an investor want to invest in a fund of funds? I mean, it's diversification for one between
Different
managers,
funds.
right? And then usually, so for a lot of investment funds, there's a minimum commitment size. So, for a real estate fund, maybe it's 100K. For a hedge fund, maybe 250K. There's all these, maybe for larger funds, it's like $1 million. So if an investor only had $1 million, then they could only maybe allocate to a few different funds. But via a fund of funds, if you allocate there, then they get exposure to 15 or 20 different funds. So
are usually the returns a little bit lower than a regular fund because you're investing in obviously different funds?
Yeah, it's diversified. I would compare them to private equity return, like a hybrid between private equity and real estate. But they will still through a fund of funds, you'll allocate to venture, which is asymmetrical returns, right? The potential to have these home run hitters. So I don't think in a fund of funds you charge a lot smaller fees, so you're not double stacking fees too much. But I would say they're still solid returns.
Okay.
So yeah, I would say that's kind of my next big focus and move.
And for the listeners to know the difference between you launching a fund as you being the general partner, the manager, and raising funds for you to go and seek deals. You can also participate on a fund a lot more passively as a limited partner, correct, Lincoln?
Yeah, totally. So limited, I mean, that when you say go out and raise money, you're raising that from limited partners. Limited partners are just investors, right? I mean, the great limited partners are institutional investors like endowments or sovereign wealth funds or just insurance companies, these massive
family offices,
right? But there's also, and especially the emerging managers, there's a lot of money you can raise from high net worths. So those are just individuals that just have a lot of money. And, once they've, allocated to the stock and bond markets, pretty heavily, they start to look for alternative investments. Right? And so that's where you come in.
Yeah. What is the, I've seen funds for obviously private equity, real estate, all type of assets of real estate. What is one of the um, less common fund that you've seen so far? I mean, the most different fund. I mean, now that you're exposed with so many people joining the
Yeah.
program, what something that it was like, what? There's a fund for that? I mean, what?
Yeah. Well, honestly, there's so many. I mean, one that I'm sitting on an advisory for, it's affiliate marketing. So essentially, this guy realized that, okay, I can make other people money. If you give me dollars, I'm going to go spend those dollars on different marketing campaigns as an affiliate and make back a commission on those marketing campaigns.
And give
And
returns.
Yep. And then instead of just paying me if I want to scale, he's doing that through a fund where he's going out and raising money to put towards these marketing campaigns scale the fund. So it really is so unique. I mean, we've had people buy, something that Bridget and I talk about a lot about. We had a client come in that bought and sold almond farms, right? Literally pieces of land, and you can do a fund through there. If you can take capital, buy an asset or trade an asset and make a profit, you can
can do a
basically
fund.
do a fund through that.
Yeah. Yeah.
So a lot of businesses you can do fund models through. So we had a guy out of Brazil that would buy and sell shipping containers through funds, right? So there's really the possibilities are endless.
There's endless, yeah. Yeah, and there's a lot of social target funds that I've seen. I remember I met a guy that launched a fund in South America, actually, and he will lend money to very small businesses, like businesses in farms and rural areas. And we're talking about $2,000 loans for these people to launch very small businesses so that they can help the community and make a living. And he will charge them a very small interest. And the way he created his whole pitch deck was obviously investors will invest in this, they will get a return, but at the same time they're supporting these impoverished countries and helping the social cause for them to get out of poverty, which I've seen a lot of funds in with those type of objectives, right?
Yeah, no, lending is a huge
Lending is
industry
huge.
right now, right? So any sort of debt facilities are a huge moneymaker in the markets. So
How do you see the future of this? How do you see the future of funds in general of this industry now that is becoming information is becoming you as IFS you're putting this information out there for everybody, in a way that is easy to access. What do you see the future for this industry? I mean, there's a huge opportunity.
yeah, no, I'm extremely, extremely bullish on funds in the coming decades. And if you zoom out and you look at it from a a macro lens, why do people go to alternatives in the first place? It's because they're looking for diversification, they're looking for yield in excess of what they can achieve on the public markets. So, and then, when we look at our current environment right now with near zero interest rates, investors cannot, and inflation last quarter, what was it, 7.2%? And a bond yield is coming out at 3%. That doesn't make any sense
No
at all.
sense. Yeah.
People can't make money in the bond markets. And then they look at the stock markets and they're seeing that, these multiples are trading at 30x, right? It's just crazy. So I think we're seeing a move to, people they want exposure to diversified assets. You're seeing a consolidation right now in the finance industry in general, right? With the introduction of robo-advising, people are going away from traditional financial advisors, and fee transparency is a big thing in the past couple of years with guys like Robinhood coming onto the markets and forcing everyone to waive fees. So I would say overall the market is becoming more intelligent, right? And they are learning about these different ways that they can make money. And with the wealth gap is obviously exponentially increasing. you're getting a lot more people that are on both sides, right? But you're getting a lot of people that have a lot of money and are looking to allocate to alternatives. So
Alternative.
yeah, very bullish on the future.
Now that creates a great opportunity, right? Now, but that leads to my next question. What about regulation? Because at the same time that funds have become or are becoming a topic that is more popular, that people are launching funds, we know that there's probably going to be a lot of people launching funds with the wrong purposes, and and maybe seeking to do fraud, right?
Yeah.
Because we see that all the time. What is your opinion on the possible regulation as funds become more popular, or as more people are getting funds into different industries and businesses just to scale their businesses, but also that leaves a lot of room for this, not too ethical people to get involved as well and seek doing harm with some investors.
Yeah, no, it's a great question. I mean, regulation moves slow, right? It really does. There have been some rules recently come out in the past 5 years with the Jobs Act and amendments to Reg A and Reg CF filings that make it pretty easy now to go out and start a fund. So I think they're aware of they're motivated to cater to managers. Let me start off by saying that. They want managers to start funds. It creates the flow of capital, into good capital investments, creates infrastructure and, builds up, the GDP. So like they are pro, markets and investments, right? Our economies are, but with that, you are seeing a lot of, especially with DeFi and crypto, they put out some very vague statements on catering to them. I don't think it's like I don't think they're going to shut down, or the markets, but it does seem like they'll pass a new law every 5 years, which adds an additional regulatory burden. So, I think their intentions are good, but overall, I don't think it's going to be terrible. You always need to be aware of the political risks at play.
Correct. Correct.
Um, but yeah, I mean, it's not something that keeps me up at night.
Okay.
So
Okay. And what are your thoughts on the economy? What are your thoughts? We briefly discussed how inflation is supposedly 7. I believe it was higher than that. But what are your thoughts on the economy for this year? I mean, there's so many things going on still. Real estate. I know you're in real estate development. And what are your thoughts in the economy overall?
yeah, I mean, I look at things from a pretty big lens, and I'm just always bullish, right? Like, I mean, yeah, there's some overinflated asset classes, and you're going to see some corrections, but um, you know, if you've listened to, so Ray Dalio came out with a book recently on um, let's see, Changing of a New World Order, Paul Mason's Post Capitalism, the Price of Tomorrow, some books that all kind of talk about this overarching thesis of like technology is changing the game, because the price of like a one labor input does not equal one laborer's output, right? You put in one labor unit of technology and you build it once and you can sell it 100 times, right? And it's systematized. Like,
Yep.
The implications of technology and AI are just radically changing all economies, and all formulas that we thought we had on economics, like they're just being shaken right now,
Yeah. Yeah.
and they're
Yeah.
being
Yeah.
challenged. So I think it's foolish to be myopic and look at, oh yeah, this, we had a 10% market pullback on the markets this week, like and think that it might be because of A, B, and C, but I think it's always important to zoom out and go macro and just say, look at our economies of scope and scale, and how things are changing fundamentally. So
Yeah.
I'm always bullish, and yeah, that's a fault of mine, but It's kind of the way I am.
Well, and the other thing also is that, I agree with you in terms of looking at the macro, but also in certain, when you're analyzing certain industries, I think it's also very good to analyze it very locally, right? Like in real
Oh,
estate,
totally.
right? Real
Yeah.
estate, I mean,
In real estate,
you have to do it locally. I mean, I don't even read those articles that come out about the real estate market in the US because it's impossible to analyze it nationally. There's so many submarkets and markets, and they're so different each city and market and area that you can't really analyze it,
so
in a
yeah,
macro.
I think the only thing there is like the macroeconomics that you need to do on real estate is that it appreciates over time. Like
Yeah.
that's basically so, are you a fundamental believer of real estate or not? And if you are, great. And then yeah, then you obviously go into the submarkets of everything and
You analyze it.
try to, see if it's a good deal or not. But I think just do you believe in that asset class is
Yeah.
the important question.
Yeah. What do you think? What's the asset of your choice?
Oh man. Yeah, real estate's always good, but I mean, building right now doesn't make a lot of sense. Like costs are so high. I don't know. Everyone says the tech wave is over, but I'm, really starting to look at, just, tech integrations of all industries. We're seeing it in agriculture and in, healthcare. And I think, I mean, the sectors that are booming, it's always like a current sector we have, but add on tech, right? Like
Yeah.
health tech,
Yeah. Yeah. Yeah.
like I just think, it kind of goes back to my prior comment, but the integration of technology into sectors where it's not used very efficiently and effectively, that's where I'm bullish on right now. So batteries, all that stuff. But
The couple weeks ago that I talked to Ethan, he was mentioning how NFTs can have, let's say, medical records on them, and eventually he believes, that's gonna have that will be a health integration with financial technology, which are the NFTs used right now for. I think that's is gonna, I mean, change everything. The moment that
yeah,
you can
smart
have your NFT
contracts.
on your phone and you go to the doctor, they pull up all your records out of it. I mean, those are the things that are, they're moving so fast.
Yeah, no, I mean, I think that cryptos and DeFi, it falls under the tech sector in my head at least. Um, but yeah, I mean, there's huge implications of that. I'm very bullish on those industries. So
What are top three books that you would recommend that have helped you in your quest to unlock wealth and keep unlocking wealth for you, Lincoln?
yeah, I mean that's a great question. I mean, it feels like it changes. Like for me, I read it. I'm constantly reading or listening to books, and I'll jump from sector to sector of whatever I'm fascinated about. I mean, I'll read 3 or 4 books on that, subject matter. And if I want to learn about a, a trend, then I think that's the best education you can do is just go read 3 or 4 different opinions. So I mean, since we've been talking about it all day, those are probably my recommendations. But just with the transformation of, I mentioned them earlier, of tech and the economies, but go read Ray Dalio's books. Like he's really great at the macro lens. I mentioned Paul Mason's Post Capitalism.
Yep.
It's a little
I've heard about that one.
yeah, it's a little radical, but I think he's got some really great, economic principles, throughout the book that make a lot of fundamental sense for me. I can't remember who wrote it. Price of Tomorrow. Talks about inflationary and deflationary pressures and how they work against each other. Is Jeff Booth, I think it is.
Okay.
That's another great one. But so those are my favorite types of reads. And then I'll always, get into all the other stuff. Oh, Anti-Fragile is just like Nassim Nicholas Taleb. Like he's probably one of my favorite authors. So he's the author of The Black Swan as well.
Okay.
But really great in accounting for risk in your investments. So,
Okay. If you have to choose, or what are your top skills that you are constantly developing or mastering, and I know we need more than two, but if you got to choose two or three that you think are critical to move forward and succeed at whatever you're doing, whatever the case is, whatever it is, launching a fund, a new business, anything.
It's a good question. I mean, first and foremost, I think if you're really going to be good at anything, and it might be cliche, but you just need to be passionate about it. It's not really, it'd be weird to look at a skill and say that's passion, but I would say there is. There's people that are passionate about what they're doing and excited about it. And I think passion bleeds into all other skill sets, right? It bleeds into your diligence on how hard you're studying that and how hard you're working towards accomplishing those goals. I mean, I think it's good to be passionate in an industry that's growing, right? Like, I think, again, take a step back and with, engineering, right? If you are passionate about that stuff, yeah, like go all in. But, just make sure that you're from a high level, the industry is growing, and then, just educate yourself on it as best as possible.
What does Lincoln do every day to keep yourself disciplined and motivated? And if not motivated, at least disciplined, right? Because sometimes we lose motivation, but that discipline is that keeps us, oh, I got to do it again, right? Oh, I feel so lazy to go to the gym, whatever. But that discipline to get up and do it, just keeps you forward, because we do lose motivation sometimes, right? For whatever reason, right? I mean, our life mood is not constant. It's ups and downs for whatever reason, whatever season in life we're in. So what does Lincoln do every day to, go at it?
Yeah, I mean, I'm definitely a believer in, morning routines. So, I'll wake up and I always start my day through education. I'll always start my day reading. I like, I think there's some things in life where you can be intrinsically motivated on, and reading education is one thing I am on. Something I'm not very good at and I need sometimes to be extrinsically motivated is exercise, right? Like, I like going to the gym, but sometimes it's so time consuming. So then I need to just have activities that I can, integrate and get more exercise. And then I'll say, like, I'll vocalize, my goals. If I can't do it myself and if I'm failing, then I'll tell everyone. Like, I mean, I just told my team, I was like, hey guys, I'm starting to get out of shape. Like, I want to run. So when I'm in shape, I run 1 mile at the beginning of every workout, and it'll be like a 6-minute and 30-minute mile. So it's kind of like a sprint. And I'm a bigger dude, so that's good for me. That may not be good for a lot of people, but but I'll say, hey, by this date, I'm going to be running a 6:30 mile every day. And so I'm, I'm putting my goals out there, right? And I'm vocalizing them and letting other people hold me accountable, because if I'm failing at holding myself accountable.
Okay.
Does that make sense?
Yeah, and that gives you it presses you to move on, because there's other people holding you accountable now.
Yep. So I think, use your friends, use your networks, let some people say, oh, if you have to be extrinsically motivated, you're failing. But no, like, people want you to succeed. They want you to, reach your goals. So if you're failing, put it out there and they'll hold you accountable. And it's a lot harder to let everyone else down than just yourself. So.
That's a cool tip. I like that.
Yeah.
People hold you accountable. Yeah, that's great. So now, if some of our listeners want to start getting more information about the funds, about how to launch a fund, maybe joining Blackheart or IFS, some of the mentorship programs that you guys have, how can they get in touch with you or the team so they can have additional information?
Yeah, I mean, if you want to connect with me personally, just shoot me a message on LinkedIn. I'll usually be happy to connect with people there. If you Google investment fund secrets or Bridger Pennington, so he's one of the founders of the business. You're going to see a lot of ads. Just follow those funnels. But me personally, LinkedIn's probably going to be the best place.
Okay. And I'll share your LinkedIn on the video as well, so people can reach out to you, and so the listeners can get some more information and maybe join and decide to launch a fund.
That's right. Yeah. We'd love to have anyone come work with us. So
that's awesome, man. Well, Lincoln, thank you. We're coming to the end of the show, but I wanted to thank you for joining and sharing your thoughts and sharing your strategies and sharing information about funds and how to scale businesses and how to unlock wealth, which I think is a journey, and it doesn't happen overnight. But thanks for coming in, man. I appreciate it, and I'll see you in Vegas in a couple months.
Hey, sounds good. Happy to help, man.
All right, man.
Good chat.
All right, thank you. Take care, man.
Bye.